Good afternoon, and thank you very much for having me here. Just going to click on the Verify Present. Here we go. Now, I'm very conscious that sitting through 50 presentations over 2 days is quite a sterling effort. So we try and do things a little bit differently at Coda. I'm going to give you a story over the next sort of 10 minutes or so, really about the background of the company, who we are, and the context of the market that we're working in. And what I'd really like you to do from this, if you can please, is go to our website, go to the updates page, go to our investor hub. We're very active on social media. To the best of my knowledge, we're the only junior company with our own podcast called the CODcast. Now, as ridiculous that sounds, I have a view that it's really interesting to get and see the rest of the team. So if you want pages and pages of geological data, go to the CODcast, get it straight from the mouth of our exploration manager. What I'm going to try and do is give you a bit of background, also talk a little bit about the copper market and where we're going over the next year or so. Just to put this in context, we're about 6 hours north of Adelaide by car. We're right on the Gawler Craton, smack bang in the middle of one of the world's premier copper exploration areas. Our neighbours, primarily BHP on all sides, formerly Oz Minerals at Carrapateena. But it's not just neurology. We have over 1 million tonnes of contained copper equivalent. So that's copper, cobalt and silver, already primarily in JORC indicated resources. Corporately, we've been listed 4 years, and for a junior listed nearly 4 years, we've been pretty disciplined on the capital side, just 175 million shares on issue. A lot of that is driven by our fantastic chairman, Keith Jones. He's the former chair of Deloitte Australia. Robin and Paul, they really bring the grey hair and the experience. I believe they've put 17 precious and base metals projects into production over a combined 80-year career. So rest assured, I have serious adult supervision. My own background is in mineral economics, and Kudzai, our CFO, is also here today as well. So again, it's a pretty good structure, very few shares on issue, and a great board. Now, this next slide came around. I was listening to the second best exploration-focused podcast called Money of Mine. It can be quite variable, but sometimes they have fantastic guests, and one of these was Ahmed Salim, who's a real expert in the exploration analysis space, and he was talking about what makes a great exploration company. So I sat down and I wrote this slide because I was trying to work out whether or not we measured up, and I'd like to think we came across pretty well. So he said quality assets are important. Well, we have material scale, over 1 million tonnes of contained copper equivalent. That's about 800,000 tonnes of copper, 30,000 tonnes of cobalt. We're advanced, 92% of that is in the indicated category. That's great news. We don't have to do any more drilling to be able to publish net present values and to be able to issue scoping studies and pre-feasibility studies under the ASX and ASIC rules. It's beautifully low risk. South Australia is a genuinely tier 1 location in an industry where the phrase tier 1 does get thrown around like confetti sometimes. One of the best places in the world to be operating. Since we listed, we've taken 250,000 tonnes in open pit, decent quality deposits, and through exploration, we've turned that into over 1 million tonnes. We've also demonstrated viable mining, technical processing pathways. And look, I think we put out our first study a bit early, maybe disappointed the market with a 570 mil MPV. We've taken that to 826. That's a 45% increase in a year since I last stood here. That's been a big effort, but we have plenty more in the tank. Sometimes I think it's good to say, look, we have a project, this is where we're at, we keep making it better, and we're currently working to improve that again. It's a strategic asset. One of the beautiful things about this cobalt is it's not, like most Australian projects, locked up with the iron sulfides. It's a carolite, that's almost a pure copper cobalt sulfide, and that means it recovers over 90% through flotation and through final stage. This also makes us eligible for the critical minerals incentive programs, the new tax relief program that the government has announced, and other sources of ESG-friendly funding, which you don't get if you're a copper-gold concentrate exporter. Now, I'm going to very quickly fly you through the deposits, but again, please just go to our website. There's many versions of this presentation up there, and there's also interviews with our exploration manager. As I said, 6 hours north of Adelaide, we have about 740 square kilometres of prime exploration ground right in the centre of the Gawler Craton. 3 open pit deposits. Now, The flagship deposit's underground, and one of the challenges with an underground deposit is how long it takes you to get down there. It's not particularly expensive in the grand scheme of capital, but that time is problematic. One of the beautiful things about this project, 3 open pits that give you early revenue. The first open pit just 15 metres below dune sand, and look at those grades when they come up. So 1.9% nearly in the open pit there, just 15 metres below dune sand. Nice little starter deposit. Transitions have gone a bit wild here, but 1.7% for the second of the open pit deposits. Great little deposit. It's been optimized quite aggressively at this point. As you see copper prices rise, I'd expect to see re-optimization. That's generally a fairly standard part of mine design at the moment. 4 small open pits within the same deposit, but 1.7% in an open pit, just about 45 meters below dune sand. Now going up to our flagship deposit up the top, this is Emmy Bluff. Now, it's a funny deposit. It's what's called a flat dipping deposit. It's only about 4 or 5 meters thick for the most part. This is really common in Europe. It's very common in Africa, quite unusual in Australia, and I think we sometimes get a bit of a discount for that. But it's worth reiterating that this is depends on slightly how you measure it, but about the 11th largest primary copper deposit in Australia. You don't get those 40, 50 meter thick intercepts from this thing, but you can walk 30 minutes along those flanks and still be standing on reasonably homogeneous mineralization. That has real advantages for mining as well, and very solid grades there, 1.8% with the copper and the cobalt together in the underground. 30 million tons in the mine plan. Mine plan looks like this, lots of panels. We're planning to use a couple of Joy Global machines. These are mechanical cutting machines. It's a very soft dolomitic shale. And they chomp away at 1.5 million tons per annum each for a 3 million ton mine life. So the economics in the study, again, there's lots of presentations on this online, but 826 million MPV where it's currently sitting. We're working on some pretty material stuff in the lab right now with recoveries. Expect to see this increase if the work we're doing is successful. The first stage has been. The next critical stage will hopefully be released in the next few weeks. Steady state production, 25,000 tons of copper per annum plus 1,300 tons of cobalt. That's pretty significant. There's significant exploration areas here. You can see out to the east. We've got some beautiful geophysics. So you can see the main resource outline and then the targets beyond that. Right now we're focused in the lab, but it's beautiful to have this exploration upside. Now, talking of exploration upside, in June 2021, our share price rocketed from a pretty spectacular intercept underneath the main body of mineralization. Now, for the avoidance of doubt, nothing I'm talking about here is included in the study or in the resource. This is a blue sky, stage 3 kind of opportunity here. But what's pretty cool is we hit a lot of ore-grade intercepts. I realize you can't see these labels, but they're roughly 2-3%, 4% copper for roughly 20 to 30 to 40 meter intercepts underground. That's cool. We started drilling it. We defined a pretty significant area. What we currently have, it's expensive drilling. We decided to focus on the main deposit. So it's a really interesting thing underneath there. You've got this 2-kilometer corridor right along this massive gravity anomaly, completely undrilled, bookended by ore-grade intercepts at either end. What's in between there? I honestly don't know at this point. I have some speculation on it. I'd love to go and find out. But as an opportunity here, you can see that beautiful trend all the way up to Oak Dam East and Oak Dam West as well, just on this side of the Panati upwarp. So again, an interesting opportunity there. Not the main game, but it does certainly explain some of the heat in our share price 3 years ago and the main focus that we currently have on the sedimentary. Now, I'll quickly do this bit, but I often say don't trust any junior CEO that talks about their market for half the presentation. It generally means they have pretty poor assets in a pretty hot market. I'm going to break my own rule here and talk about the market briefly, but for the opposite reason. I believe we have spectacular assets in a pretty average market. Why have I got the lithium and uranium things up here? Well, I was fortunate enough to be educated first at Oxford and then at WA School of Mines, mineral economics. And I can basically distill the entire learning of mineral economics into about 10 seconds. It's all about 2 things. It's about elasticities of supply, how fast supply can react to changes in demand, and it's about the cost curve. how much of the supply curve is dominated by the major companies. Lithium's a fascinating one. Demand increased, supply didn't match up, especially with the concentrates. There's lots of lithium deposits around. Supply is now caught up, and you can see that market really coming off. A lot of heat out that market. A lot of money to be made whilst it's going up. But again, in the long-term market, the major companies are going to the large companies will do very well because they dominate that cost curve. Uranium, kind of a different story. You've got a very tight market. Why? Because over the last 10 years, there's been very little exploration. It's very hard to get a uranium project into development. Everyone talks about investing counter-cyclically, myself included. I wish I'd bought more uranium stocks 5 years ago and 3 years ago. But very few people actually walk that walk. And copper's a fascinating one to me. Just to put it in context, the lithium and uranium, depends on how you measure the lithium market, but roughly the lithium and uranium markets are barely 10% of the total copper market. This is a massive market. It is moving into forecast deficit. It doesn't matter, you can argue all you like about how we're going to make power, produce power, and you can argue all you like about how we're going to store power. There's only one way to move it, that's copper. And the cost curve is dominated by the large companies. 80% of the world's copper is produced by 20 companies, basically. So what does this mean? Well, I'm going to bring this back to Coda, don't worry. We're moving towards a massive deficit. I keep getting lots of research on how the copper price is moving. Keep saying at the moment with the way that copper juniors are being priced, it's like the old rhyme of the ancient mariner. They're shipwrecked and water everywhere, nor any drop to drink. Lots of copper research, but the market hasn't been moving. But as we know, when these markets move, they move. The answer to that, and there's more than just Coda presenting over the next 2 days that I believe are good copper stories that are going to be part of this solution. We're going to need every one of these companies to come into play and more. The major companies are depleting, the major projects are depleting, there's been very little exploration, and the cost curve gets really expensive per cost per marginal ton to get this extra copper out as you start demanding more. So supply can't move quickly like it's been able to do with lithium. The lower end of the cost curve is dominated by the majors. Grades are depleting, things are getting deeper, projects are in more and more challenging ESG areas. So why does this work for Coda? Well, low capex, low sovereign risk in South Australia, and a very predictable, explainable and understandable approvals process, which have already started. So I believe we're very well placed in this area. Back to Coda. Talk about the copper market all you like, but if we haven't got any catalysts, what's the point? First catalyst, metallurgy. The big area for improvement in this project is improving recoveries. The cobalt is beautiful, plus 90%, but the copper ranges from about 66 in the smaller deposits to about 77% recovery in the underground, our flagship deposit. We've had some major success in the lab. The next stage results are coming soon. We're also looking at that growth through exploration. We're at about 11, 12-year mine life. Another 4 or 5 years on that will make a material difference to the economics of this project, and I believe very much worth pursuing. We've already increased the NPV by 45% over the last year or so. Keep watching this space. We're absolutely dedicated to improving this project, and we've started the approvals process. So to summarize very quickly, right now, we're in the maximize phase. We're increasing the value of this project. We've already demonstrated what we can do. 4 times increase in resources through exploration. Recently, a 45% increase to the predicted net present value of the project. Next stage, expand. Continue to increase the size of the resource base, looking for just a little bit more in that mine life. We don't need to double it or triple it. Another 10, 20, 30% would be incredibly powerful. You're just amortizing the capital over more tons. And then transform. The IOCG, I realize I went through that pretty quickly. There's, again, lots on our website, but the IOCG is an interesting, fascinating blue sky opportunity. It's a stage 3 beneath the main one. It gives long life potential that I believe will be a source of interest for companies that are wanting more than that 10, 15-year mine life in the initial one. If you're going down 400 meters, going down a bit further isn't necessarily such a barrier either. So again, please visit us at codaminerals.com. Reach out to us at info@codaminerals.com. We try and be the most transparent, open, authentic exploration company out there. We will always respond to your questions, and we love feedback. So thank you very much, and I hope you have a fantastic rest of the conference. We're round the corner by the back coffee machine if you'd like to come and have a chat. Thanks.